Hey everyone, welcome back to Corporate Decoder. Today we're diving into George Risk Industries' latest filing, and let's just say the numbers are telling a familiar yet interesting story about their consistent performance. If you love digging into the nitty-gritty of how companies actually work, stick around. And hey, if you appreciate getting these insights without the corporate jargon, make sure you hit that subscribe button and join our Discord community linked in the description below for more exclusive content. This is a quarterly report, a snapshot of George Risk Industries' financial health for the 3 months ending July 31, 2025. It's like checking in on your portfolio, but for a whole company. This is a company that's been around for a while, definitely not a flashy startup, but one that seems to be steadily chugging along. They're in the business of making security products, alarms, and related items. Let's jump straight into the numbers. On the asset side, George Risk Industries had about $8.2 million in cash and cash equivalents at the end of July 2025. That's up from around 6.4 million at the end of April, so they're building up their readily available cash, which is generally a good sign. Their investments and securities are a significant chunk of their assets, valued at over $38 million, up from about 35.7 million. This tells us they're holding on to and likely growing their investment portfolio. Accounts receivable, which is money owed to them by customers, sit at about $5.1 million. It's important to note they have an allowance for credit losses, meaning they've set aside some money for customers who might not pay. This is a standard practice and shows they're managing risk. Inventories are listed at just over $10.5 million. This means they have a lot of product ready to be sold or in the process of being made. Looking at their total current assets, which are assets they expect to convert to cash within a year, they have about $65 million. That's a healthy number, showing good short-term financial strength. Now, let's flip over to the other side of the balance sheet. Their current liabilities or short-term debts are around $4.8 million. This includes things like accounts payable, which is money they owe to their suppliers. Total liabilities, both short and long term, come in at just over $7.5 million. When you compare this to their total assets, you see they have a very strong equity position. Their stockholders' equity, which represents the owner's stake in the company, is a massive $60.6 million. This is a really strong indicator of financial health. Moving on to how they performed in terms of making money. For the 3 months ending July 31, 2025, their net sales were about $5.9 million. That's a slight increase from the $5.78 million they made in the same period last year. Their gross profit, which is what's left after subtracting the cost of what they sold, was about $3 million. They've managed to keep their cost of goods sold below 50% of their sales, which is what management aims for. Income from operations, meaning profit from their core business activities, was $1.8 million. This is also up slightly from the $1.77 million they made in the same quarter last year. Now, here's where it gets interesting. Other income and other expenses show a big jump. For the quarter ending July 31, 2025, they had a gain of almost $3 million from these. A huge part of this gain comes from investments, specifically unrealized gains on equity securities, which means the value of stocks they own went up, added over $2.3 million to their income. All of this adds up. Their net income, the final profit, was $3.79 million for the quarter. That's a really impressive 40% increase from the $2.7 million they earned in the same quarter last year. And for shareholders, this translates to basic earnings per share of 78 cents, up from 55 cents last year. That's a solid improvement. Let's look at how they generated and used their cash. Cash from operating activities was about $2.1 million. This is the cash generated from their day-to-day business operations. In investing activities, they spent about $336,000. This was mainly on purchasing property and equipment and buying marketable securities. They received some cash from selling investments too. In financing activities, they repurchased a small amount of their own stock, spending about $9,000. They also paid out $5,000 in dividends. These are relatively small amounts compared to their overall financial picture. The company notes that these financial statements are unaudited and should be read with their full annual report. They also mention purchase of transferable tax credits from solar energy projects, which gave them a nice boost. It's a smart move capitalizing on government incentives. This note details their investment strategy. They hold municipal bonds, real estate investment trusts, equity securities, and money markets. They use average cost for equity securities and report unrealized gains and losses in earnings, while unrealized gains and losses on debt securities are kept separate in stockholders' equity. It specifies that they didn't record any impairment losses on these investments, which is good news. Looking at the schedule of investments as of July 31, 2025, their municipal bonds are valued at over $7.8 million with some unrealized losses, but they believe these are not other than temporarily impaired. Their equity securities are valued at almost $29.4 million, and these also show some unrealized gains. This section explains how they value their investments using a three-level hierarchy. Level 1 is for actively traded identical assets, and Level 2 is for similar assets or those with observable market inputs. They classify most of their publicly traded securities as Level 1 and municipal bonds and REITs as Level 2 because active markets are less common for them. As of July 31, 2025, their equity securities like common stocks are valued at over $30 million in Level 1, while their municipal bonds and REITs fall into Level 2 with a value of about $7.9 million. A significant event after the reporting period is that their board of directors declared a cash dividend of $1 per share, estimated to be about $4.9 million. This shows they are returning value to shareholders. This section is where management talks about their performance. They are pleased with the improvement in sales, operating income, and net income compared to the previous year. They also mention managing back orders and navigating government tariffs. Net sales saw a small but steady increase attributed to a resilient economy and their focus on customer service. The cost of goods sold as a percentage of sales is within their target range, showing efficient operations despite rising material and wage costs. Operating expenses increased slightly due to sales commissions but remained a manageable percentage of net sales. The big story here is the significant increase in other income driven by their investment portfolio's strong performance, particularly in equity securities. This surge in investment gains is the primary driver behind the impressive net income growth. On the liquidity front, their cash position has improved. They're managing accounts receivable effectively, and inventory levels decreased somewhat, likely due to strong sales. They are also actively managing their payables and accrued expenses. Their investment activities show continued purchases of property and equipment and marketable securities. They also received a distribution from an investment in a limited land partnership last year, which was a one-time event this year. They are continuing to repurchase their own stock, though in very small amounts, and are paying dividends. George Risk Industries is actively working on new products, including explosion-proof contacts for hazardous locations and programmable sensors. They've also begun producing new magnetic contacts for high security applications and expanded their panic switch offerings. Wireless technology is a key focus for future product development. The company is also open to acquiring businesses that complement their operations, leveraging their strong cash position. They don't see any major seasonal trends in their sales, which are tied to industry building trends. The company states this disclosure does not apply to them, suggesting they don't have significant exposure to market risks like currency fluctuations or interest rate volatility in a way that requires separate reporting. Management has evaluated their internal controls and procedures and found them to be effective. There have been no significant changes to these controls during the quarter. Under other information, we see they had minimal share repurchases this past quarter, with only 600 shares bought back in June 2025. Finally, the exhibits include the typical certifications required by the Sarbanes-Oxley Act and documents for interactive data filing. So what's the verdict on George Risk Industries? Looking at these numbers, the company appears to be on solid ground. Their core business is generating consistent profits, and their strategic investments are really paying off, boosting their overall net income significantly. They're clearly managing their cash well, paying dividends, and even investing in future growth through new product development and potential acquisitions. While they're not immune to economic factors like tariffs, their steady performance and growing investment income paint a positive picture. The primary strength here is their ability to generate income from multiple sources, both from their operations and their well-managed investment portfolio, creating a diversified revenue stream. Two is their ability to generate income from multiple sources, both from their operations and their well-managed investment portfolio, creating a diversified revenue stream. Overall, George Risk Industries seems to be a financially stable company with a clear strategy for growth and shareholder returns. It's a business that understands its market and is prudently managing its resources. Alright, that's our deep dive into George Risk Industries' latest filing. What are your thoughts on their performance, especially the impact of their investments? Let me know in the comments below. If you found this breakdown helpful, give it a thumbs up, and for more insights like this, hit subscribe. Don't forget to join our Discord community linked in the description for even more exclusive discussions. Thanks for watching, and we'll see you in the next video.